Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. With me, I am Sonal Bhutra and with me is Hormuz. Good morning, Hormuz. And what a start to the week, right? After that long weekend, it's the flying rally that we're seeing right now. It's a hope rally right now, of course, because of the GST cuts that the Prime Minister announced. That'll come by Diwali. But of course, we need that approval coming in from the state governments as well. But the market is happy. It would lead to a consumption boost, something that our economy was lacking for a bit right now. Across the board, there's green, be it Nifty auto, be it Nifty consumption. But IT, that is the sole issue today. But that's a flattish negative that we are seeing right now, not a big cut on the IT space. But as I pointed out, Nifty auto doing really well. That index is up 5% as we speak. We have the realty index is doing really well as well. So 2.5% there as well. The next one is Nifty metals. The safeguard duty that has come by, so 1.7% on that one. The small cap index, 1.5% higher there as well. So a long list of movers that we'll be discussing in just a bit. But as usual, a power-packed trading hour is lined up for our viewers today. First up on our special segment, The Big Story, we put spotlight on the GST rate cut proposal by the centre and tell our viewers on who benefits from the move and what will the common man cheer about. We get chatting with Gautam Bed of Complete Circle Wealth Stellar PMS next to understand his reading of the proposal and his overall take on the markets as well. Around 11:15 in our another special offering, Crypto Corner, Manisha Gupta will join us to decode the stellar surge in the crypto market this month. Zaggle Prepaid will join us at 11:20. That's the first corporate conversation on the show, and we discuss the company's Q1 performance and way forward. The stock is up 10% in trade. And lastly, to understand the 20% rise in the coffee prices over the last 10 days and its impact, we'll be joined by the management of CCL Products. So that's what the lineup is looking like right now. But as we've been highlighting, right, the big story of the day has been the proposed revision of GST rates by the central government. So on the big story today, we put the spotlight on what can change, who benefits and how. All this explained by Hormuz. He's bringing us all the details. Hormuz.
Some big bang announcements made by the Prime Minister in his Independence Day address, particularly relating to the GST rate rationalization that can take place by Diwali. And the effect is there to see. You can see stocks like auto and consumer durable names rallying, Maruti, Suzuki, Hero MotoCorp within the auto pack, Ashok Leyland gaining up to 8%, Voltas, Blue Star, PG Electroplast, stocks like these have gained up to 10% today. So very strong rally across the two prime beneficiaries seen from this rate cut or a potential rate cut in the GST rates, and that is the autos and the consumer durables. Now take a look at what the brokerages are saying about this. Now if you take a look at Jefferies, they are expecting this to take place in the fourth quarter of calendar year 2025, which is of course the October to December period, where the rates could be rationalized from 28 to 18%. That could be cement, two-wheelers and AC names, and they are expecting also some sectors where reductions could be seen include the likes of insurance, hybrid cars, and they are also not ruling out a proposal for processed foods and also for garment and footwear names as well. Now, if you take a look at what Jeffrey said as further, they are also not ruling out a proposal for GST rate rationalization for passenger cars as well. That cannot be ruled out according to Jeffries. Now, what they are also, Citi is mentioning among the key beneficiaries, they highlight sectors like medicine, processed foods, non-alcoholic beverages, certain apparels over a certain price category, white goods, insurance names and cement stocks. These are the ones that could be the likely beneficiaries according to Citi. Now what they are also saying is that this GST rationalization, the tax cuts, the rate cuts that were announced earlier by the Reserve Bank of India, all of this could boost the festive season demand and the earnings outlook for FY27, which is keenly awaited. Now Kotak is saying that this would be a 2.5 lakh crore boost, and this is likely to benefit auto and consumer durables more and less likely for cement, because for cement there is a lack of price elasticity, which is why this could be a little lesser of a beneficiary compared to auto and consumer durables. Now Goldman Sachs is saying that the consumer products which are in the 12% slab category could be a key beneficiary here, and they are highlighting names like Trent, where apparels above 1,000 form around 1/3 of their overall sales. Now for metro brands also it could be a big boost boost if the GST rate cuts are cut for footwear priced above 1,000 rupees. And among the other names that could benefit include the likes of Page Industries, Bata, Nestle, Dabur, Titan. They are some of the other names that could see some benefit. Now, for CLSA, if the rate is cut to 18%, materials, consumer durables, cement and AC makers, again, similar names that could be key beneficiaries. And particularly for AC makers, CLSA is saying that after this recent sluggish demand period that we have seen, a potential GST rate cut could significantly influence demand for the AC manufacturers. Now, for Bernstein, they are highlighting insurance in particular, and there you could see an 18% premium, and that could see a rate reduction as well. And for the Nifty, they are expecting a high single-digit return for the rest of the year despite this tariff uncertainty and some of the other headwinds. They are also saying that they are retaining their sectoral view of preferring consumer segments over industrials. They had recently upgraded the consumer staples. They are also upgraded durables earlier this year, but they are retaining their underweight stance on the industrial space. So big bang announcements coming in over the weekend, but it is autos and consumer durables that are primed to be the key beneficiaries here.
Oh, yes, as we can see in the stock moves as well from that space. Thank you so much, Hormuz, for bringing those details to us. So that's what brokerages are making of that proposed GST cut that has been announced. Let's get this conversation forward. Gautam Bed, equity advisor, Complete Circle Stellar Wealth PMS, is joining us now to discuss market fundamentals and this quick update that came by the long weekend as well. Gautam, good morning. Thank you so much for joining in. First up, your thoughts. Do you think this proposed cut first could go through? And secondly, what kind of demand improvement would you see? Which sectors, according to you, would be benefiting the most?
Zonal and Hormuz, thank you for having me on your show. Well, the market is already showing its verdict in the form of price action today. We can clearly see that autos and consumer discretionary are poised to become the biggest beneficiaries of this GST rate cuts if they do come through and approved by the GST committee later this year. So let's wait and watch for the approvals to come through. But for now, I think the market is pretty excited. This should definitely boost domestic demand. And along with the income tax cuts in the budget and the RBI being very accommodating, I think the macro setup is broadly in place for a very durable rally from here. And I think the market has discounted the worst of the tariff tantrum, and I think over the next few months, as the noise around these tariffs and trade wars settle down, the market should become more broader, because if you see the pattern of the market over the last 12 months, it has been very narrow and selective, and the focus for the last 12 months and even going forward should be on stocks with earnings growth visibility for the next 2 to 3 years, preferably those that are more domestic facing in nature. And this is a time to be a risk manager with a focus on portfolio construction. Now, what do I mean by that? It means that your portfolio should be balanced across industries and risk factors and avoid single factor risk. Do not go overly overboard on any one single stock or sector, because the pace of change around the world and in India as well, driven by AI and the rapid geopolitical shifts, is pretty stark. So be on the alert every day for any fundamental change taking place in your individual businesses and the underlying industries.
Gautam, good morning. Thank you for joining in. A sector, we've spoken of autos and consumer durables, but one sector that is slowly creeping its way into this potential GST rate cut is insurance. And how do you view this as a positive for the sector? Because despite a slew of measures being taken within the space, it continues to remain an underpenetrated sector for a country as large as India. Do you believe that this could be a near-term kicker for a sector like this, for especially because it is set to have a long-term growth runway?
Well, almost that has been a long-standing demand of the insurance industry, both life and non-life, for a GST rate cut, and hopefully it will come through. Because as you rightly mentioned, the penetration in India is still pretty low, and even today, insurance is primarily more of a push product rather than a demand pull product. So I think hopefully, if the premiums come down, then demand should definitely pick up. But within this industry, again, not a stock recommendation, but we have discussed this stock in the past, MediAssist Healthcare, and there basically, instead of choosing one single insurance player, you can choose a third-party administrator, which basically caters to all the players in the industry and which has got a durable competitive advantage in this particular space.
Okay. Gautam, one sector which is not doing so well today in a very strong market like this is IT. Actually, it's the only space which is in the red today. What's your take? We've seen a lot, Q1 earnings and the layoffs that TCS announced. Do you think this year could continue to disappoint? What are some of the triggers that market is watching out for when it comes to the IT space?
Well, in the IT space, Sonal, I think there's a structural downturn in place because of AI. If you look at the IT space in India, you have to segregate it into two parts. One is the IT services, which have basically not spent any money on innovation as such in the last decade or two, and they are the ones who are being disrupted big time by AI. On the other hand, you have got the IT product companies. They are the ones basically who will be more agile and more able to adapt to the changing environment. And that is why you're seeing a stark differentiation within the IT space. IT services like TCS, Infosys, Wipro are underperforming, whereas the product companies are basically finding favor with investors. So this is a space in which you have to be very, very selective, and the pace of change here is only picking up. So I think you really have to do a lot of bottom-up stock picking in this particular space.
Gautam, we've spoken about a lot of these FMCG names and so on, but I would specifically single out the cigarette-oriented names because this is one space where there is talk of the sin tax being increased into the 40% bracket. But regardless of the changes that have happened to the tax slabs in the past as well, the cigarette volume growth has continued to remain as is. So this may be, do you see this only as a sentiment negative? Because at the end of the day, the volume growth has had no impact whatsoever regardless of the tax structure that these cigarette companies have had.
Well, almost in this particular space of in the tobacco industry, it has been the demand has been pretty inelastic in response to price increases in the past. Even for the last many years, we used to see a sell-off in these tobacco stocks just ahead of the annual budget. But as soon as the budget passed, basically these stocks used to go back to their all-time highs. For in the most recent quarter, a few stocks like Godfrey Phillips have reported very strong numbers. And if they sell off because of bad sentiment around the sin stocks category, that could be used as an opportunity to accumulate for long-term investors. We do not have any exposure to the tobacco stocks in our PMS portfolios, but this is just one of the ways to approach this particular industry stocks.
Okay. Gautam, I wanted your take generally on the markets overall. We have been seeing these uncertainties around US-India trade tariffs. There's a lot with respect to consumption as well, which the GST proposed cuts would try to address overall. What about earnings as well? What's your take? What happens in FY26, FY27 with respect to market moves? Any specific sector do you think would outperform the majority of other spaces?
I think definitely the domestic facing industries and domestic facing sectors will find more favor from investors, both domestic and global from here, until the tariff situation is resolved. However, because of this tariff uncertainty, the export driven sectors, excluding the categories which are exempt, for example, pharmaceuticals is exempt right now, so the stock price impact there has been limited. But in industries like textiles, gems and jewelry, where there is a big sell-off taking place because of this tariff news, if they come down to very attractive valuation levels, be on the lookout to basically evaluate them as and when the tariff overhang gets removed. Because if the tariffs get normalized and come down to a more rational level of suppose 15% or so, then you can see a big re-rating in many of the names right now which are underperforming. So have your watch list ready, do the research, and keep the names handy, because as and when the tariffs come back to a low level, if they do, then these names are primed for a comeback.
Indeed, Gautam, pleasure having you as always. Thank you so much for sparing time and joining us today. Looking forward to have you more often on the platform. Gautam Bed of Complete Circle Wealth. By the way, the index has cooled off slightly from the highs, around still 325 points higher, so no complaints there whatsoever. Still at 24,960 is where the Nifty stands. Take a short break. On the other side, put the spotlight on the crypto market. Manisha Gupta joins in on the other side.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Well, welcome to Crypto Corner, and today we're talking about the kind of numbers that cryptos really seem to be stacking up, all on the very, very positive side. I'll start with what we've done in sense of the market cap, which is gained up by 13% for the month of August, and with that we are up by nearly 13% there at $4 trillion therein. So very strong numbers coming in there, and it's not just about Bitcoin, because we've seen very strong numbers coming in for altcoins like Ethereum, Solana, Cardano, Aave, and then you have stable coins as well surging quite higher when it comes to prices there. Take a look at the kind of companies which seem to be buying all of these cryptocurrencies. Well, crypto corporate holdings for Ether have gained up by 126% in the month of July to nearly 2.7 million of Ethers there. The strength really comes in with the kind of adoption that we have seen from institutions, companies and funds, etc. The maximum buying really came in from BlackRock, Goldman Sachs, Wells Fargo, Novus Sovereign Wealth Fund, and also some more companies like Tesla, Jane Street, Mubadala Investment from Abu Dhabi and Harvard University as well. So all of these have been major buyers for the month of July and continue to buy for the month of August as well. And then it also is about the kind of buying that we've seen across. The stable coin legislation has fueled nearly $2.1 trillion in sense of monthly transfers there, so much so that it also has surpassed the Visa volumes on a month-on-month basis. Not just stable coins, the real-world asset tokenization is a market which stands at $24 billion now. And then NFTs, which were doing quite flat in the last couple of years, also seem to be coming back in this year. We are looking at NFT sales up by 50% for the month of July there. The Bitcoin mining profitability also is surging because the Bitcoin prices are going higher. So we've seen that increase by 2% in July, and that has led to hash rate go up by 5% as well. Now, what is hash rate? Hash rate is a total combined computational power that is used to mine and process transactions on a proof of work blockchain. This also is used as a competition on how much exchange hash rate is one using, and that also tells you on your profitability in that sense as well. So this is something that the markets take a look at on a very, very strong basis when you talk about cryptos and blockchain as well. So the numbers here also are quite strong. This is of course measured in X hashes per second, the time taken to mine one. And when you look at the revenues because of the X hash per second, that seems to be surging as well. Last year was $50,000 a day. This year in the month of June was $56,000, and in the month of July that has gained up to $57,000 per day as well. So very strong numbers coming in about mining, about hash rates, and of course profitability as well. Now these are the US listed companies which are mining Bitcoin. It is understood that of all the Bitcoin that has been mined in the last 1 year, 26 to 27% of that comes in from US, and that number seems to have grown on a month-on-month basis as well. So from 3,400 odd to 3,600 plus Bitcoins have been mined in the month of July. So very strong numbers across board at all parameters coming in for cryptos on that black chart. Well, that's all that we have on Crypto Corner, but with that, it's a short break. More news and updates on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. On to the final few conversations from the earnings of the quarter gone by. Zaggle, the management is now joining in after a strong quarter that they reported revenue growth driven by the Propel platform. The company has in fact reiterated its guidance for the full year. Avinash Gorkhindi, the MD and CEO of Zaggle, is joining in to discuss the road ahead. Avinash, thank you for joining in. You know, you had earlier mentioned that 35 to 40% this year is a conservative growth guidance, and if all acquisitions fall into place, you might even go up to 80%. What is the status of those acquisitions currently, and why are you still sticking to that 35 to 40%? And if those acquisitions fall into place, where do you see growth going into?
Good morning. Thank you for having me. I think, yes, we are delighted with our quarterly performance. We are sticking to our guidance for now of 35 to 40%. We are actually tempted, as we spoke on the analyst call, to up it, but we'd probably, have a relook in Q2, end of Q2. This is the organic growth. The inorganic piece, of course, as these acquisitions fall in place, they will definitely add a lot of, heft to our momentum. And many of them are progressing very well. And some larger ones are in the pipeline that we'll announce in the coming, months.
Avinash, I just wanted to actually ask you on the inorganic growth as well. 31.5% in quarter one. Was it entirely organic? And when we talk about acquisitions, what do you have in your pipeline in the first half? What kind of spends will you look at? And in FY26 itself, will you see major acquisitions come by?
Yes, so lots of questions, but I'll try and answer one by one. Yes, 31.5 was all organic. The inorganic contribution was not there in this. We see some of the large ones closing this year. Yes, so the whole idea is to do a couple of more acquisitions on the larger side. And then consolidate for the coming years. So that's the thesis that we are operating on.
What about your recently acquired projects, Avinash? Tax Spanner is one of them. TransXT is the other one. You recently acquired them. They might be a smaller part of your business currently, but how do you see them scaling up for the rest of the year?
Yeah, so 86400, which is the TransXT, is the brand. 86400 is another brand under the company Mobileware. They're doing extremely well. They exceeded the last year profits in Q1 already. Last year revenues, they have already done half of that in Q1, so they're doing brilliantly. TaxSpanner is doing extremely well as well. They've got great contracts with companies like Bosch, and they already serve companies like HCL and Accenture. Of course, the tax filing has got pushed back by the government to September. So a lot of their revenue momentum should kick in Q2, which we are anticipating. We're also very bullish about a very strategic acquisition that we are doing with Rio Money. That's going to be something which is going to become extremely large in the coming years with our B2B2C play. Our ability to be able to source users at a very low cost and to be able to drive those users to ride on the UPI and credit on UPI wave, right? And credit cards on UPI. So that's a very secular, strong trend that you see, that UPI is ubiquitous and we are riding on that wave. So that's the other piece. In general, on acquisitions, our theory is what we call as the pearl of strings theory. We are basically string of pearls theory, rather. We're trying to get an entry into a lot of very interesting plays at very tempting valuations, much lower than the private investments that happen through private equity.
So,
Venture
Avinash,
capital, and we leverage that to grow fast.
Yeah. So, Avinash, when inorganic growth will also pick up in the coming quarters, can you first talk about how much will you be spending on these acquisitions? And secondly, with these acquisitions come by, what happens to overall costs as well? There'll be some adjustments you'll be making. Costs would go higher as well. What happens to margins then?
So, look, one of the things that we did was we raised 593 crores in a QIP last December. The purpose of that was acquisitions, very clearly. And a large part of that money, about 565, 570 crores, is still in the bank, right? So a lot of these acquisitions are stock plus cash. So we are sitting with a very large, quantum of capital to be able to deploy. The cost, most of these acquisitions are either profitable or their losses that we have on their P&L is very small. A lot of them, for example, DICE and others would be able to help us save about 25 crores in costs. And that's what we spoke of in the call as well. Just in terms of synergies that kick in, and these are initial estimates, we have not gotten deeper. And in the coming years, the overall cost savings would be even higher.
Okay, all right. So we'll talk about that in greater detail once those acquisitions kick in and we see results coming into your P&L as well. Avinash, always a pleasure speaking with you. Thank you so much for joining in today and giving us those updates about the company's outlook going forward as well. That's Zaggle Prepaid. The stock is up 9% on the back of good numbers. But let's talk about other stocks which are on our radar. Harmis is back on the big wall. He's talking about all the big movers in trade today. Harmis.
You spoke about the more obvious ones. Let's put the spotlight on some non-obvious ones as well, right? IFB Industries is one of them. Of course, part of the consumer durables list that has seen a stellar move today on hopes of a potential GST cut. And this 18% up move is the biggest single day gain that the stock has seen since 2015. 2014. And look at the volumes here as well. Or in the first couple of hours of the trading session, we have already had 12 lakh shares changing hands compared to a 20-day average of just 14,000. But despite this move today, the stock is still down 20% on a year-to-date basis. The stock had doubled last year in 2024. The other big mover today is Pennar Industries, and this is also the biggest single-day gain. This 17% move, the biggest single-day gain since June of last year. We've already had 36 lakh shares change hands compared to a 20-day average of around 4 lakh. And it's been a good, it's delivered decent returns for its shareholders as well. Positive annual returns every single year since 2020. We spoke about auto names, the Marutis and the Ashok Leylands, but look at Hyundai Motor, India's largest IPO till date, 8.5% higher, the biggest single-day gain since its listing. It's already now up 24% from its IPO price of 1960, and we have already had 16 lakh shares change hands in the first couple of hours of the trading session today compared to the 20-day average of just 1.5 lakh. And on the downside though, cigarette names, as we mentioned earlier, Godfrey Phillips bucking the trend today, 5% lower on the stock. It's already declined in 5 out of the last 7 trading sessions. But on lower volumes though, the number of shares that have changed hands today is 1.7 lakh and the 20-day average is 2 lakh. So the fall today has come on lower volumes, and despite this down move, the stock is still up 85% so far on a year-to-date basis.
All right, some interesting names there. Thank you so much, Hormuz, for joining in as always. So those are some movers, but it's time to slip into a break. When we come back, we'll discuss market technicals with Nagraj Shetty from HDFC Securities. Also talk about the top trading bets. Welcome back. You're still tuned into Trading Hour. It's a good time to talk about the F&O space. Sudarshan is bringing us the latest trends from that and more, and a lot more. Sudarshan.
So after a blockbuster start to the week in which we saw Nifty crossing the level of 25,000 for the first time since July 25, now we have moved to a range where Nifty is trying to hold on to the levels about 24,950. And on the upside, crucial support remains around 25,020. That is the very important support. And that is a range-bound trade is now reflecting in the both PCR as well as the volatility index. And if you look at the options data, now the range has moved higher on the both side, put as well as the call side. So in the put side, if you see both 25,000 and 24,900 strike rates are very active, seeing healthy additions. And on the call side, 25,000 is healthy. And more than that, 25,100 has become very active, which is saying very healthy additions. So support for Nifty is now around 24,760. That is the 20-day moving average. And resistance is 25,020. That is the first resistance. In the intraday, we saw Nifty crossing that level. But again, it's very important level because that is the 50-day moving average. If we manage to cross that level comfortably, next support comes the recent high of that is 25,250. I have taken 2 stocks. One, because we are seeing a big up move in stock, the gold financials have seen a down move, and that's the reason Muthoot Finance is seeing long unwinding. And one positive stock on the positive side that I have taken is the Maruti, which is the top Nifty gainer, and it's seeing fresh addition of longs.
Boy, what a move in Maruti today, and in fact, across all of the auto pack, 8.5% higher now on the stock is Maruti, now above the 40,000 mark. Sudarshan, thank you for that update. Of course, 25,000 proving to be a bit of a barrier for the index, despite this 300-point up move that we are seeing. Nagraj Shetty of HDFC Securities is joining in for a quick chart check. Nagraj, thank you for joining in. Well, do you see this as an opportunity to trim down your long positions, considering this massive gap up that we've seen? And what are the key levels that you're watching on the index and your stock moves, stock recommendations as well?
Good morning, Hormuz. The way Nifty has moved up today is indicating definitely a change the sentiment of the last 4, 5, 6 weeks downtrend in the market. The opening upside gap remains open as of now. I think this gap would be considered as a bullish breakaway gap, and normally technically we believe that breakaway gaps are formed near the important bottom reversal point. So here the 24,300, the recent swing low of the Nifty is going to be the important bottom. 1 or 2 days of consolidation, I'm expecting further upside from here onwards, and next upside target to be watched for Nifty is around 25,300.
Okay, all right. And Nagraj, what would your individual technical picks be?
Yeah, I have two stocks. One is SBI Life. Chartically, SBI Life has been in a longer consolidation. Recently, in today's session, seen some signs of a breakout, and today we have seen some sharp breakout of around 3.5%. The overall chartically looking positive, moved above the key moving averages, and volume started to break above during the upside breakout. Currently trading around 1904 levels. One can look to buy at this point of time, and the upside target would be around 2020. One can place a stop loss at 1850 levels. My second one stock is AB Capital, Aditya Birla Capital. After a smaller consolidation or a small decline, downward correction, the stock has bounced back in today's session. The overall chart pattern is looking positive, moved above the crucial hurdle. Currently trading around 285 levels. One can look to buy at current market, and the upside target would be around 300. One can place a stop loss at 278.
AB Capital and SBI Life. Some interesting recommendations from Nagaraj. Thank you for sparing time and joining in today with your views on the index and for your stock recommendations as well. Just before we take that break, pull up PG Electroplast, and after that 35% down move that we had seen the week before last, the stock is now up 12% at the highest point of the day. Mind you, the stock is in the FNO ban, so it's 13% higher. So no new positions, of course, that can be made on the stock. So keep PG Electroplast on your radar, 13% higher at the highest point of the day. Take a short break. The management of CCL Products joins in on the other side to discuss the surge in coffee prices. Stay tuned. We'll be right back.
Welcome back. It's a rainy Monday morning, so we have to talk about coffee. Let's get in CCL Products. Challa Srishant, the managing director, is joining us now. Robusta prices, they're up 20% in the last 10 days. The price declining trend has reversed from August 7th. The effective tariffs of Brazil, 50%, would come in effect very soon. So let's talk all about that and the results as well. Srishant, always a pleasure speaking with you. Let's talk about what's happening when it comes to coffee prices globally. There's so much happening with respect to tariffs, which would impact coffee prices globally. Can you give us a sense of what's happening and what's the outlook considering so much uncertainty around tariffs?
Yeah, so one with Brazil is the largest producer of coffee in the world, and there's a 50% tariff that was imposed on Brazil. So that was actually one of the reasons why there was a sharp fluctuation in prices as well. And apart from that, now the season as such is over in Brazil. The harvesting has been completed. The next crop cycle that's going to come is coming from Vietnam in November. So between now and then, we are expecting the prices to be a little volatile and then correct downwards again from November, December onwards again.
Okay. So is, since pricing will continue to be volatile from November onwards, it will come down. Can you give us a sense of what happens for companies like yourself? In Q1, while revenue growth was really strong, what Street was a little disappointed with was gross margins. That came in lower on a YY basis. What does it do to your margins?
So actually, our margins are exactly the same. In fact, if you see our EBITDA actually grew. The reason why there was a PAT degrowth is because of the MAT credit that we have. We are still now in the 35% tax bracket. So it's a book entry that is being made. And the actual cash flow is not getting negatively impacted at all. So it's merely a book entry. There's no reduction in margins at our end. We work on a cost-plus model, and irrespective of the fluctuation in prices, our business model continues to remain the same.
Srishant, well, for non-coffee drinkers like me, I'll stick to the business part of the things. But you mentioned in your earnings call that your branded business is likely to go up to around 400 to 500 crore this year. How has that been shaping up in the quarter that we have seen so far? We're already halfway through the second quarter now, almost 2/3 of the way through actually. So how has that shaped up, and do you believe that you will get to 400 to 500 crore for the branded business, considering you did around 100 crore in the first quarter?
Yes, we are completely on track with whatever projections that we've given. Our team also is a little conservative when it comes to projecting something, they want to make sure that they can actually achieve it. So they build everything, the forecasting from the ground up onwards. So whatever numbers that have been given is something that we're confident that we will achieve.
Okay, so that's something that you're confident on, and you've also guided for a revenue growth of around 15 to 20%, and also 10 to 20% in terms of volume growth. Sorry, that's the EBITDA growth, the one that I spoke about earlier. Let's talk about capacity utilization, Srishant, because there have been new capacities which came up. What is the overall capacity and the capacity from new facility?
Yeah, so we've actually doubled the capacities a couple of months ago. So now the new capacities have come online, and the new capacity is operating at around 30% utilization. And overall, we're looking at ramping up to 70-80% utilization within the next 2 to 3 years. And we're on track with that as well.
Any further capex plans, Srishant? And if so, what does that do to your debt picture? Currently, correct me if I'm wrong, it's around 1,700 crores, if I read that correctly. And what's your plan to bring that figure down, say by the end of the year and for next year as well?
Yeah, so there's no capex plans at this point in time. In fact, our long-term debt is only about 750 to 800 crores. And the balance is only working capital debt, which is there. And considering the improvement in cash flows and all that, we are looking at reducing our debt levels towards the end of this year to maybe about 1,500 to 1,600 levels.
All right. Srishant, you know, the freeze-dried coffee margins are higher than spray-dried coffee. Can you give us a sense of what the split is currently? How would it be somewhere down the line by FY27? Because there's been a lot of shift that's happening in your overall portfolio as well. So if you can give us a sense of what EBITDA per kg would look like if there's a bigger shift that would happen to higher margin products.
Yeah, so our freeze-dried coffee typically commands around a 10% extra margin compared to spray-dried. What we have done at our end is we've expanded both spray and freeze. The original plan was to actually focus only on the spray-dried expansion. But then due to the demand that we were seeing coming from the market for freeze-dried as well, we went in for our expansion for freeze as well. So our blended margins, our EBITDA is likely to remain more or less constant.
All right, Srishant, thank you for sparing time and joining us today. Wish you good luck for the rest of the year as well, and as you move forward to achieving your predetermined targets. The Nifty still at 24,950 as we speak, 313 points higher. Endurance Technologies has moved to the highest point of the day, or has been at the highest point of the day, 10% higher on that stock. What has actually moved to the highest point of the day now is Maruti, 9% higher now on that stock. The top gainer on the Nifty, the biggest single day gain that the stock has seen in the last 5 years now since 2020, a 9% move now on Maruti Suzuki, 14,100 on the stock. And in line with that, Hyundai too has moved to the highs of the day, 9% higher there as well. Ashok Leyland is up 8.5%. So all of these auto names are in top gear currently. And what is also providing some bit of heat to shareholders are these AC names as well. Voltas is up 8%, Blue Star is up 7.5%. And a lot of these the tractor makers are doing very well today. Escorts Kubota is up 7%, and Hero MotoCorp too, 7% move on that stock as well. Whirlpool is up 6%, but on the downside, well, of course, not many, but there are a couple of earnings reactions. Glenmark is one of them, 3.5% lower on that stock. At the lowest point of the day now is Glenmark. Godfrey Phillips too has extended its losses. That too is down around 5% now as we speak. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour. Well, you know, a lot of stocks in the broader markets which are seeing big surge. PG Electroplast, that's one stock. This was a casualty last week on the guidance cut. Today, that stock has seen a comeback, 12.5% higher on that one. Ashok Leyland is the other one, 8.5% higher on that stock. Reported numbers last week. Voltas, some of these names actually which were reacting to disappointing earnings are making a comeback today. So 8% higher on Voltas. Now remember, Voltas also reported numbers numbers which were weaker than expectations. So that stock is seeing a comeback. Vodafone Idea, from nowhere, that stock has seen a big surge, 7% higher in Vodafone Idea, even though it's a single rupee stock. So that is a 0.42 rupee surge that we are seeing right now. Nevertheless, we have auto anc stocks which are doing very well. Auto ancillary, that is. Minda is up around 7%. We do have Bajaj Fin, which is higher, 6% on that stock. So you name a sector and see the movers from there. It's a big surge, barring IT, which continues to disappoint.
There's a cascading effect on the NBFCs as well, right? Bajaj Finance 6%, like Shriram Finance, that too is doing well for itself today. And some of the others, the insurance names as well. Niva Bupa is up 7.5%. New India Assurance is up 6%. So the insurance names too on a potential GST rate cut hopes are also rallying in today's trading session. Just before we wrap, some updates coming in from SkyMet, where they're saying that Mumbai is likely to see heavy rains for another 4 days. And the rains in August are almost 600 millimeters. In the last 4 days, we've already seen 450 millimeters of that. So we will request the Mumbaikars to stay safe as well as the rain continues to pour. With that, we take your leave on this edition of Trading Hour. From Sonal and me, thank you for watching. Halftime report on the other side.